Well, it's important to talk about how your tax brackets are impacted by inflation, but many of you are also thinking about your retirement plans. Colin Evans, a financial advisor with Evans Financial Group in Shreveport, joins us in the KSLA studio to continue a 5-part series on the ways that taxes can rise. Talking about the third part of that series, which is deductions and how they can be limited. Now, Colin, thank you so much for joining us today. First, let's start by talking about, is a client's tax bracket the only factor that can potentially impact their taxes while they're in retirement?
No, and that's not really something that a lot of people think about. It's because we really kind of, see people focus on just specifically on brackets, but hindsight, we really can miss the boat on thinking about deductions when our friends in Congress get together and they decide they're going to change a few things. Deductions can also have a huge impact on those retirement dollars, and it makes a big difference when in your retirement and you're living on that fixed income.
Now, why are tax brackets not the only way people can pay more?
Well, you got to think, if you're living on a fixed income, and we're just to keep math simple a little bit, if somebody's taking home $100,000 and they had $20,000 in deductions, but Congress decides next year we're going to alter your deductions, you can only take 10. Well, now instead of me paying taxes on $80,000 of income, now I have to pay taxes on now $90,000 of income. So it can be a little bit of a burden. Go, oh goodness gracious, I wasn't expecting this tax burden to be on an additional $10,000 of income just because they changed the game.
Now, that's a good point. Now, what happens if your brackets didn't change, but your taxes did?
Unfortunately, it can go both ways, and we've seen that happen. We're still, fortunately, kind of in the lowest tax brackets we have ever seen in the history of our country. And in 2017, when Congress got together, as Congress does, and they want to change things for us, they started impacting deductions a little bit. And one of the biggest ones we really saw were the deductions for dependents. And what they kind of replaced that with was the child tax credit. And so after tax time, a lot of people got income checks back, and it's like, oh, here's your little check for your child's tax credit. But the deduction that was taken away was actually quite a significant larger number that we lost on that. So they're they're giving us a little bit of a trade-off, but at the end of the day, it hurts us just a little bit more painfully in the pocketbook.
Absolutely. So is there any way, finally, that consumers can prepare for this type of change if it does impact them in retirement?
At the end of it, it does come out to get out and vote. It really does, on who has your best interest at heart. And unfortunately, Congress doesn't ever say, hey, we're going to tax this in a different direction, because that's going to reduce votes. And one of our big ones, actually next week's topic, is a really big topic of dealing with Social Security, because that's a really big impact for our retirees today.
All right, Colin, thank you for joining us. Definitely looking forward to continuing this series. And right now, you can read all of today's top news and financial headlines on our KSLA News 12 app.